Hello there, hi, it's Adil bringing you an inter-market analysis perspective of the US markets. So basically, the summation this week has been, well, so far it's Tuesday, it's the 19th of August, and basically we're observing nothing but a short squeeze. Now let's go to our NASDAQ because the NASDAQ tells or explains it all basically. We had this formation which I did highlight. We had a left shoulder in, right shoulder, and obviously the markets was expected to fold, and obviously we've got this unfilled gap below that needs to close, touch of 200 MA. Ukraine situation, Iraq situation, Palestine, Israel, Gaza, North Korea. I mean, the list goes on in terms of geopolitics. So they were all the basically bearish view on the markets, etc. Bearish factors in the markets for the markets to go lower. And obviously that didn't occur. The markets didn't actually transpire or didn't materialise that way. The markets went in the opposite direction, short squeezed higher. Obviously, given the fact that the market sold off on a Friday with regards to a Russian convoy being hit. Call it what you want, whether it's some option next rumours, so on and so forth. It's irrelevant from our perspective. Obviously, a lot of individuals got a chance to buy the dip, etc., and we had a hanging man at double top resistance, especially after closing that gap. The markets obviously retraced more than the 75% fib resistance, which usually is the is a cut-off point for a right shoulder. If the market does exceed that, then you generally get a short squeeze higher, and that's exactly what we got to new highs. So you can be stubborn in your positioning and maintain a bearish view, but if the market's telling you it wants to go in the opposite direction, then that's what traders do. That's what I do as a day trader. That's what professional traders are supposed to do. We're supposed to react and then obviously adjust our positions accordingly. So now that obviously over the weekend we've got some news, whether it's out of Germany, whether it's out of Berlin, or whether it's out of Russia, Moscow, or whether it's out of Ukraine, that there's peace talks, or they're going towards peace talks, and they're going to some sort of reconciliatory, trying to call for a truce, so on and so forth. So obviously the market's interpreting that, and obviously has factored in all the bearish news. So America obviously has ignored Ukraine, Russia, because largely it's not really being affected as much as Europe, okay? And they're focusing more with regards to Jackson Hole and Miss Yellen's dovish view. So the fact that the American market, especially the NASDAQ, can write off Ukraine, write off Iraq, write off Israel, Gaza, and obviously putting new highs in the NASDAQ shows a risk appetite there, that they're willing to embrace risk. So if they're willing to embrace risk on the NASDAQ and play the social media rally, then obviously, given the fact that it's very sensitive to global growth, etc., then they obviously the markets usually are interpreted as being bullish. So hence the reason why a lot of people just buying the dip, even regardless of geopolitics, because it generally averages itself out or negates it overall. So that's basically what we're expecting and what we're looking at right now. So we just have to respect the tape, respect price action, and respect it for what it is, okay, and keep moving forward. So okay, so with regards to the NASDAQ, as you can see, moving higher, okay. Like I've explained, the short squeeze is being led by Miss Yellen, and with regards to her dovish view, that's what the markets are short squeezing into. And obviously the talk of reconciliation in Ukraine and Russia, the Gaza and Israel situation, obviously a peace or ceasefire has been extended there. The Iraq situation doesn't seem to be taking much of an influence. I did expect the Ferguson situation to have an impact, but obviously that wasn't the case either. So I did allow my NASDAQ trade to, I entered the NASDAQ trade at 4,005. I got an average around 4,008. I expected it to create a fake out. Obviously yesterday I allowed the trade to go through. I had a stop loss of around 4037 region. I realised obviously I gave it 24 hours and the market still hasn't had that fake out on the NASDAQ. So therefore the conviction in the buying is certainly strong, as you can see there, okay. Pretty impressive. It held. There wasn't any topping tail. There wasn't a reversal back below the previous 4,000 mark. So you have to respect that. So if the NASDAQ's higher, then all global markets will be higher. And given the fact that inflation data came out lower in the UK as well, I've maintained my bullish view on the FTSE, with it obviously after it's broken the 75% fib, just like the Dow Transports, and obviously we short squeeze higher. So whether you want to fight the tape, it's totally up to yourself. You have to be flexible and adjust accordingly. Now, having said that, if any news does come out of Ukraine and Russia, that's not beyond my control. Okay, and that can send the markets lower, and that could certainly be a fake out in the Nasdaq. And again, we're traders, we have our stop losses in place. We can only account for the endogenous variables in the system, and right now the endogenous variables are telling us it wants to go higher. Obviously, if an exogenous variable event occurred, then that's why our stop losses are there to protect us, and I'll be more than happy to shift my bias to the short side. Okay, now this is exactly the type of analysis and insight that I give my subscribers on the live analysis service. So those of you that are interested, who want access to my day trades, then go to my website, inter-market-analysis.com, which is there, and if you click on the live analysis service, it explains, I've got a video there and explains exactly how I operate. Okay, so that's basically what I'm looking for. Okay, so let's get back to trading, folks. Okay, so where are we? Okay, so like I explained, Nasdaq's going higher. Nasdaq is usually the key for my intermarket analysis study. Therefore, we go higher. Okay, so that's basically what we're observing there. So that would be the catalyst to propel all US markets higher. Look at the biotech. Biotech obviously has broken that downtrend line. We have to respect this pattern on the biotechs. Now, I didn't expect this to play out, but obviously it is. Okay, so you've got a left shoulder. Okay, and then obviously your right shoulder has been respected, so therefore more than likely you go back and test the new highs, given the fact that Nasdaq's tested and broken new highs. Okay, so previous new highs. Semiconductors, obviously we've got an unfilled gap there, given the fact that every other market, especially the US markets and the European market, especially the FTSE now, has broken past its 75% fib. Then we certainly are looking to go higher, even though the semiconductors have been relatively weak as of late. Okay, so this gap fill resistance is here. If not, then obviously we go to this previous resistance 636, and it'll be interesting to observe the semicons. If you see any weakness in the semicons, then obviously expect the market, the Nasdaq, to roll over. Okay, so going back to our S&P 500, the S&P now is currently trading at above the 1970 level, so it's actually broken above. Okay, so they're given the fact that the Nasdaq has obviously broken above and gone past its previous high, then don't be surprised to see the S&P back to 1990, 1980 and higher. Okay, and given the fact that the Nasdaq has obviously, sorry, the S&P Nasdaq has passed its 75% past, broken the previous high, then don't be surprised if the S&P continues in that direction as well, and certainly starts to move higher to 1990 and if not higher. Okay, so it has to be respected overall. Okay, so with regards to the Nasdaq, you can always cross-reference that with the Russell 2000. Again, Russell 2000 has broken its H&S neckline. Therefore, that generally equals a short squeeze, broken through its downward sloping, contracting or expanding wedge. Okay, so I delete that. Okay, and delete that. You can delete the H&S now. It's no longer valid. So it certainly wants to go higher, close the gap, and then obviously you've got another gap to close. So two gaps that needs to close above. So therefore bias is certainly tilted towards the upside. Okay, given the fact that this is one hell of a powerful bias change. Okay, so in the markets, like I said, the catalyst is obviously a de-escalation of geopolitics globally, plus the Jackson Hole. Okay, and obviously short squeezing going into it. Okay, and obviously everybody is afraid of Miss Yellen and her dovish perspective. Okay, nobody wants to be caught on the wrong side, so short squeezing obviously going into that, given the fact the market's been cut down quite substantially. Okay, so that cross references the strength and the movement in the S&P, so that these two gaps above can cause the S&P 500 to go to 1990 if not higher. Okay, now let's go to the Dow Transports. Dow Transports, like I stated, we had a H&S formation. It went past the left shoulder around the 38 to 50%. It's gone past 61%, gone past 75%, and as we all know, oil prices are below around the $96, well below 100, and that's generally been the catalyst for the propel higher, and obviously a de-escalation globally, and that's the situation that we find ourselves in. Now, the reason why the market sold off on Friday was because of the rumour of Russian convoy being hit, and obviously the Mosul dam. The dam in Mosul being taken over by those fanatic, idiot, imbecile Wahhabis, basically stupid idiots that don't represent Orthodox Islam. Okay, I'm a Muslim, I represent Orthodox Islam, the correct version of Islam, which means peace and love and respect to all, not like these imbecile idiots. Okay, so they twisted, demented a view of the world and obviously of religion. Unfortunately, it's a sad state of affairs. But either way, it's a good job that they're getting bombed to smithereens. It's about time they get eradicated. Okay, so basically they basically are no longer in control of that dam. If they're no longer in control of the dam, then obviously that reduces their power there, and obviously that no longer leads to any more geopolitical concerns if the Americans are back in control in Iraq. Okay, and that means that no ground troops, etc., etc. So if you can stop them, then generally they'll tend to disintegrate anyway, because they don't really know how to fight. Just cowboys with a few guns that have been, God knows where they've got them from. Okay, so anyway, that's basically the situation that we find ourselves in. Okay, so right shoulder gone past 75%, and therefore that obviously bodes bullish for the Dow Jones. The Dow Jones is into 61%. More than likely, it'll follow the path of the Dow Transports and obviously S&P and the Nasdaq, and go up to its 75%, if not higher, and go back to its 100%, retrace to the previous high. That's why it's bullish. Okay, so that's basically what we're looking for. Right shoulder's been broken on the Nasdaq, therefore right shoulder more than likely will be broken on all of the indices in the US markets. And given the fact that Europe has been hammered, absolutely hammered as of late, just a formation that I'm looking at right now is the CAC. This is a very important formation, and observe this. You have an inverted head and shoulders formation in the CAC. Therefore, that means bullish for Europe. Therefore, we go higher. And obviously the de-escalation in Russia, Ukraine, etc., etc. So don't be surprised if you hear some type of reconciliatory comment, for example, from Russia stating, "Oh, the sanctions on Europe have been lifted." Okay, and obviously Europe doing vice versa, and that could well be the catalyst for one hell of a rally. Okay, anyway, folks, so that's basically it. So remember, short squeeze going into Yellen, and that's what's obviously propelling all global markets higher, and de-escalation as well. So that's basically a summary of the US position that I have right now. Again, I was bearish, as you all know the reason why. Predominantly gap fill resistance, right shoulder on the Nasdaq. That sends everything lower, given the fact that we've got geopolitical concerns globally. And it's amazing how over 2 days the situation can change. That's trading, folks. Okay, you have to be flexible. You have to shift your bias. It's very, very important. You can't be stubborn in your opinion. You can't marry your opinion. You can't marry your view. You have to divorce it very quickly. Okay, so become single. Okay, if not single, have 4 wives. Anyway, so remember, this is one of the bit. I mean, this is one hell of a quote. I became a winning trader when I was able to say, "To hell with my ego when I'm wrong. Making money is more important." Okay, so don't call the market a bull or a bear. It can switch. Just ride the trend. Jesse Livermore. Okay, so it's very, very important. Okay, the markets can remain illogical longer than you and I can remain solvent. Okay, so that's basically trading in a nutshell. Risk on, risk off, wax on, wax off. Goodbye.